Boyer here with Boyer Financial Services, and welcome to the Boyer Brief. I'm here with Jason Jacoby.
How's it going? Good to be here.
Good to see you.
Good to see you.
We're here in the middle of May, enjoying cloudy, lousy weather, but hoping it, clears up. It's kind of, selling May go away. It's kind of like, rain in May, I guess.
Yeah.
I don't know what's going on with the weather too, but here we are, and we're glad to be here for the Boyer Brief. Quick updates on the markets, kind of most recent 13th of May. The Dow Jones is up 9.7% year to date. S&P 500 up 9.5%, and the Nasdaq up only 1.8%. Nasdaq was on a tear last year. The big growth stocks, the big Amazons, Microsoft, all the tech stuff looked really good last year, and really as of this recording is back to November levels. So interesting, not surprised. We actually thought we would get a pullback in the growth area. Everybody gets all excited. When everybody's all thirsty and frothing at the mouth to own certain stocks, I get like, okay, we're probably overdone and we'll go sideways to not down for a while. So, it's been rough since the inflation numbers, which we'll talk about here in a second, hit. But so value and the Dow and the S&P are up because they're full of more large cap value stocks, the large internationals, dividend paying companies, which we felt like was going to be the rotation this year, and that's kind of continued. And we still look for that to be the positive place for this year for sure. So anyway, that's good on the markets. Again, we expected the volatility. We love volatility. I know it sounds crazy, but I love volatility because it means that there's more cash on the sidelines. People get nervous, and that cash on the sidelines feeds the next bull. So we like that.
Yeah,
so
that deflation in the markets creates investment opportunities for new investors, which is exciting.
It's really exciting. So that's great. It's what we want. So.
Well, speaking of corporate America, we've had some exciting quarter one earnings and revenue numbers. So we've had 462 of the 500 of the S&P 500 companies report so far. Companies beating revenue estimates so far, 78% have beaten revenue estimates. And then we've had 87% of companies beating earnings estimate, which have far exceeded our expectations, our analysts' expectations. That's why we're actually adjusting our year-end numbers for the S&P 5 earnings per share from 175 to 177.50 to 187.50 to 190. So we're expecting a good second half of 2021. Now, we do have some headwinds. We've got some geopolitical uncertainty, as we've seen on the news. Fiscal policy could be changing. It's on the horizon. And then we've also had nearly a 90% rally off of the March 2020 lows. So the S&P, like you kind of briefly talked about, could be due for some sideways action, some volatility, some deflation, which would be healthy for the markets. But more volatility is expected. So is there a specific reason that we're expecting more volatility, like with inflation? That's a big fear these days, right?
Yeah, well, we just had such a big run, and inflation obviously we got the number of 4.2% last week that popped up, and it was sort of a shocker to everybody. I was shocked it wasn't higher. Actually, been to the gas station lately, it's like, what? 4.2 is not high enough, but the reality is inflation is upon us. We're printing a lot of money. There's a lot of stimulus in the economy. And so that is a concern, and I know the Fed's concerned about it, as are a lot of our managers in regards to who we put our money with to help us invest it. So, but again, inflation doesn't scare me. I've seen it before. I'm old enough to remember the Jimmy Carter years. You weren't born yet, but many of us were, and gas lines, and we've seen this before. We've seen high interest rates. We've seen high, talking about corporate taxes in the 40+ range. That's happened a few different times. And still markets have adjusted and honestly many times gone up significantly, even with those types of news, those types of the news out there that gets usually people kind of concerned and like, hey, should I make big adjustments? And my answer typically is no, shouldn't probably make big adjustments unless you're really close to some big event in your life where you need cash. So anyway, but that's pretty normal and not unexpected that inflation is hitting us. The question is it demand or is it the supply? Is supply just not keeping up? and you can make that argument. We'll see. I think the next numbers here, over the course of this year, as we see numbers coming out in the future here, will be more important to see where exactly we are with inflation.
Yeah, great. Well, any closing remarks for this month's Boyer Brief?
Yeah, I would just say, stick to your plan. I mean, it's important to have a game plan, and we've sat down with you, and for each one of you that are our clients, we've worked with you to figure out what your goals and objectives are, and we have a plan. So, markets don't go up in a straight line. It's like you said, it's a longer term prospects here, and we just got to keep our emotions. It's really important to keep your emotions in check, and if you have issues with things the government's doing and all these things, just know that a lot of it's been there before. Yep. And markets still, people still buy products and sell services. So exactly. We're all trying to get out of this pandemic and get our lives back. So that's why the markets have been high, and we're pretty decently bullish going forward in regards to what we expect companies in the markets to actually do. So. Okay. That's where we're at, and so stay at it. Keep to your plan. That's the key.
Don't sell in May and go away. Come talk to us.
Yes.
We're here for you. We appreciate your business. For this month's Boyer Brief, I'm Jason Jacoby.
I'm Mark Boyer.
See you next month.
We'll see.